Hey guys, I hope you're all well and staying blessed. So today I'm going to be breaking down a quick, simple trading strategy using trend lines and support and resistance. I thought the best thing for me to do is just quickly have a recap and breakdown before we get into the charts and you see 100 different things and you start getting a bit confused. So we're just going to focus on this area here for now. So just forget this part here because this is the support and resistance that we're going to be focusing on, and this is the trend line. So support and resistance is literally just areas where people with a large sum of money trade from, or bankers, governments, people that are market movers. So as like a retail trader, you would just trade from these levels because price always repeats itself. So these support and resistance zones, these areas have been within the market with previous price action. So you could go, if you can't find any support and resistance zones, you can always go back on a weekly or monthly and look at previous price, and it will give you a support and resistance zones. Support and resistance will literally as well just increase your winning probability, because a lot of traders use support and resistance to get in and out of trades, because again, trading is art and it's like literally just right there in front of your face. So like, why would you not utilize that? So I want you guys to, if you've not taken a picture of this, I want you to draw this up, take notes, whatever you need to do, because it's very beneficial for you to remember this and not just watch the video. So support, I want you guys to remember that support is always the floor. And then I want you to realize that resistance is always the ceiling. This arrow here would literally just be price. So we're going to just ignore price for a moment and just completely focus on support and resistance. Oh, I would also like to highlight that support and resistance can also be like known as key levels, key areas, kill zones. So don't think that if you've heard key areas or key levels or kill zones before, that this is another thing to confuse you. It's just that everyone calls support and resistance or key areas different things, but it all has the same meaning. I also call support and resistance zone key levels or key areas. So yeah, don't let that confuse you or throw you off your learning. So a support zone is always something when, say this is, for example, this is an uptrend. So we have support zones as the floor and resistance as a ceiling. When price bounces off of resistance, that is when sellers will come into the market. And they would have, for example, a stop loss and a take profit. Just like that, because you want to be selling when there's resistance in the market and buying when there's bounce off of support in the market. I hope that makes sense. So resistance, support, resistance, support, resistance, support. One thing I would like to say as well is support can become resistance and resistance can become support. What you're looking for in an uptrend is bounces off of support and breakthroughs of resistance. So with this, for example, you have a bounce off of the resistance zone and you would have sellers in the market. And people would then be taking out the money because there's a bounce off of support and buying. So resistance, sell. Support, bounce, buy. Resistance, sell. Support, bounce, buy. And so on. You could have a resistance, instead of a bounce, you could have a bit of consolidation or hesitation, or a complete breakthrough. And then now this support area would then become the new resistance, which we will get on into the video. I don't want to confuse you too much, but just for the moment, just remember, support is the floor and resistance is a ceiling. I hope that makes sense. I don't want to confuse you too much. We will just use support and resistance zones as complemences in the markets, and knowing that this is where you would put your money in and out of the market. And then we're going to move on to this area here. This is the trend line, this part here. And for something to be classified as a trending trend line is a free bounce hit. 1, 2, 3. If we don't have 3 bounces, that's not a trend line yet. Wait for a bounce again and see if you have a trend line. Trend lines don't always have to literally match up to a T. It can be a little bit below, but if it's like completely off, then it won't be classified as a trend line. So remember, we're always looking for 3 bounces. And these are just, again, complemences for you to get in and out of the market. So, for example, after this first bounce, second bounce, third bounce, you have your 4th bounce. You're then looking to get a 5th bounce and a 6th bounce, etc. And if that's not the case, then you just delete the trend line and you move on from that. Trend lines are also very helpful because you can literally just get your complemences as to why you're buying and selling the market. For example, you have a hit here, a bounce off of this trend line. You can then buy, and using support as another complement, as that's why I'm making this video as support and resistance and trend lines. I think they're very helpful. These two complements together are part of my everyday trading strategy. You could use your zones as well for extra complements. For example, buy, take out your money, or extend your take profit. Sell to the trend line, buy, sell, buy. That's actually counter trend trading when you do that. So you would have like buyers and sellers in the market. A trend is just like you just would buy, and you can just literally extend your take profit from A, B, C, D, and keep moving your take profit with every bounce. You could then move your stop loss. So once I have this bounce, I would then move my stop loss. And this would become my new stop loss because we had the confluence. Move your stop loss again. And you're in profit. And if you get stopped out of the trade, it's because you're sticking to your trading plan. And so forth. I hope that makes sense. But these are nothing but confluences. We use support and resistance and trend lines as confluences in the market. Support and resistance zones can be found with historical price movement. So I hope you've taken notes. I hope this makes sense. Let's get straight into the video. So this is Euro USD. We are going to establish which way the market is trending. Are we downtrending or are we uptrending? If you said uptrending, you're correct. We are in an uptrend at this current time in the market. So you can see we're uptrending in this market at this current moment in time that we're looking at. This isn't actually like an up-to-date trend in the market. As you can see, this is from April 2020 to January 2021. So completely ignore this if you're trying to like, you know, take advice for the now. We're just looking at previous price. So we have an uptrend. Now we've established the trend of the market. We're going to look for a downtrend now. You see the downtrend now? We have reversed. We hesitated a little bit, and now we have reversed into a downtrend. The Euro USD is actually a very, very lovely pair to trade. What I would now like to make you aware of is this here is a trend line. So I have drawn a trend line from point A all the way down to this point here. And we're going to see how many bounces we get off of the trend line, because this is why trend lines are so vital when you have a clear pattern with the structure of the trend. Point A, point B, point C. I would classify this as a C because it's not actually touched the trend or like gone near to it. Well, it has gone near to it, but not like near enough. This more so bounced off of the level. So point A, B, C, D, E, and then we'll probably create an F. So we've got so many points on this trend line, and that is why this is very valid to draw on trend lines, because I use trend lines. Personally, I like to use trend lines. I think they're very, very useful, and the way that you can get great entries with just trend lines alone is amazing. Next, we have drawn support and resistance. Support and resistance is nothing other than, you know, where like the governments and the banks are trading in the market. And one thing I will say to you guys is don't try and trade against the banks, because you will blow your account, you will lose your money. It's vital for you to understand you cannot move the market. All you can do is move with the market. This is why it's so important for you to like get previous history, price patterns, and just trade with the trend or trade from the levels. Otherwise, you will lose your money, you'll blow your account, and you will think trading is a scam. And that's not the case. You just need to learn how to trade with the markets. You want to trade with the markets, not against them, because you will blow your account. So I have drew on some support and resistance zones. Let's start with here. This would be a support, and this would be a resistance. Okay? Let's take away the trend line, forget the trend line, and focus purely on support and resistance zones, the levels, the key levels where the bankers are trading, where they're taking their money or they're putting their money into the markets, okay? This is where you take your buying or selling opportunities into the market to grow capital. Here you see a support, a bounce off the support zone. So a support zone is the floor. So I hope you guys are taking notes as well when I'm saying things, because it's very informative for you guys to take notes and just remember this. So support is the floor and resistance is the ceiling. Support, floor, resistance, ceiling. Support, floor, resistance, ceiling. Okay? What I also want for you guys to understand is that support can turn into resistance and resistance can turn into support. But we're going to go over that now. So we have support, resistance with some hesitation, consolidation, price not knowing where it wants to go. Then we had a clear bounce off of this trend line, which then broke through. It just continued to go down, back to the support zone. So we had a second bounce off the support zone towards the trend line, towards this resistance mark, back down to the support. We didn't bounce off of the support again for a third time. We did with like these 2 weeks here, but with the majority of the trade, we broke through this previous support, which now is creating a new resistance. I hope that makes sense. So this previous support has now turned into the new resistance. So we've broken through previous support to this new support level here. We have then came up to this new resistance level. We have consolidated, hesitated in the markets, people in the markets not knowing whether they want to buy or sell. We've then came up again to this trend line. We have now touched the new resistance, previous support. We have bounced off of that and came immediately down to this support zone. We have hesitated, gone back up. We've not gone to our key level. We have gone to our trend line. This is why key levels and trend lines are so vital in the markets, because you always go off of the trend lines and the support zones if you are like a naked trader. Like a naked trader basically is someone that doesn't use a lot of indicators, someone that doesn't use like a whole bunch of stuff on their charts. They might use one or two things and then just like pure candlestick action. Candlesticks is something we can go through in a whole other video, because there's so much to talk about. Every candlestick has its own meaning. Every candlestick shows where the market is going. It's great for entries. That's just a whole nother video that we can do if you guys are interested. But as you can see here, we bounce on this support. We then came up. We didn't come as high as the key level. We came to the trend line. That's why trend lines are so vital in the markets, because without this trend line, we would have probably thought, oh, we're going to get up here. And someone might have actually put a trade like this. If they don't use trend lines, they may have put a trade like this and thought, oh, if you're going to scalp this on a smaller time frame, someone could have come in and put, their stop loss here below this previous wick where we've got support, and they've thought, oh, there's a lot of hesitation, a lot of consolidation. This market is, it's going to reverse. And they've put their take profit to the last resistance area, just in case we have an invalid to the upside and we retest that area and bounce straight back down to previous support. They would have lost this trade because, as you see, their trade would have been out of range from here to here, and it would have negatively taken them out the trade. And that's why it's very vital to have more than one confluence in the market. So a confluence is something that tells you, basically a yes. It's like a yes or a no. It's something that could tell you, where the market's going. It can give you like a definition, but we don't always go off one confluence. I go off normally 3 confluences. So a trend line bounce, or a break of a trend line, and the key levels is 2 confluences for me. And then I would also go off of like candlesticks, which we will discuss in another video. So where was we? I completely forgot where we were because I was talking too much. I think we was here. So we was here. So now we've bounced off of the trend line. We have now broke through current support straight down to the support area here, came up, resisted this previous support, which is now resistance, came back down towards this support zone, and prices most likely going to tap onto the trend line and come down and break through. And if not, because remember, you have to always move with the markets, and you can't always go off of just pure market analysis alone. You have to go through like what's going on within the economies, because something that's like a major news event, like a war or something, can extremely change the markets and create this to actually reverse. Although this is a clear downtrend, the market could just break through this trend line and create a reversal. Or it could bounce off of this and create a reversal. Also, another thing I want for you guys to understand is that if price breaks this trend line, it doesn't mean that the downtrend is now invalid and reversed into an uptrend. Until we've taken out the trend line and the previous major key area, that's when we will classify it as a reversal pattern. And that's just really quickly going over how I trade the trend and how I trade support and resistance. But I hope that makes sense to you guys. Thank you guys so much for watching the video. I hope you gained some knowledge in support and resistance and trend lines. If you like this video, let me know in the comments down below. Let me know what other videos you would like to see, whether that's a Q&A, whether that's backtesting, anything you would like to see, even if it's like a revising session on like trading books or business books. I'm down for it all. Just let me know what you guys want to see. Have a blessed day. Stay consistent, motivated and inspired.